Good morning. We are here on Profit First Live at Ask the Profit First Professionals this morning. And today we're going to dive into a very hard question. And that is has to do with personnel and bringing people into your company and making that big investment into expanding your current business. A lot of our group members are on, I'm going to call them solopreneurs, meaning that you are a one man show and you get to the point where you're growing your business and it's like, when can I hire someone? Because you find yourself getting busier, 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 which is the way we all start our businesses, by being that one man show and realizing, okay, it's time for me to bring somebody on. But you look at things and say, all right, when is it the right time? I'm going to talk about this in the sense of profit first and using profit first as a tool, because we're looking at cash flow, and the majority of companies that I am dealing with, the single most pain point area is payroll. It's the area that business owners stress about the most, because you're dealing with people. You're dealing with people that become your friends, people that are taking care of your baby, your business, and letting somebody go, or having a situation where you are having to affect somebody else's personal life because of the job that you're providing and the pay that you're providing them, is a very important part, and it's extremely stressful. When you are allocating your percentages, you have your operating expense as a business. And as you are operating your business, operating expense is letting you know if you are meeting your goals and if you're not. When you want to add an expense, then you know that you should not do that unless you've got added cash in your operating expense account. So think of this in the sense of hiring someone. You want to be able to support and be able to make that payment for that person that you're going to be hiring, because it's part of your operating expense. Now, there's a balance between how much work needs to be done and knowing that you're going to bring somebody on with the hopes that you can grow your business. So let's talk about that important point first. All entrepreneurs, our minds are programmed that if I could just make more money, then all my pain will go away. And you know this from reading Mike's book. It's the area that, as a profit first professional, I have to constantly reel back owners and say, I need you not to go down that rabbit hole. We really have got to get the expenses to where it's under control and that you're operating in those allocation percentages for your operating expense. And payroll, bringing on an employee, is one of those areas. When you want to bring on an employee, the money has to come from somewhere. If you are looking at expanding and you don't have additional money, cash set aside in your operating expense to be able to bring them on, start now. And whether it's a 1% amount or a set finite amount of $100, $200, whatever it might be, open up another account. Call it your payroll account. Call it whatever you need to do, a new hire account. Most of the time, we've got companies that are like, I just need a receptionist. I just need someone to answer the phone for me. We've got virtual assistants. You know that you could get a receptionist that is a virtual assistant that's not on your payroll. You know that that's going to be $200, $300, $400 a month. You start setting that money aside. When you have got 3 months worth of what it's going to cost to bring you on a new employee or a virtual assistant or whatever it might be, you're ready. Now you know that you've got 3 months of funds set aside for you to bring on that employee. Now, let's talk a little bit more about what it costs your company in order to have an individual come on. Depending upon what your industry is and depending upon the state that you're in. You're going to need to add in the benefits and the taxes that cost you as an employer to hire somebody as an employee. So if you are in California, then we ask, or we our advice is that you add 25%. So if you're going to bring on someone at $15 an hour, that you add another 25% to that. And which seems like a lot, but in California, our taxes are high and we've got lots of rules and regulations that we have to follow. And so we do estimate high on that. In the state of Texas, it's not, you don't have to deal with that same thing because you're not dealing with state income taxes. So the percentage is more around 10% for that. If you're in the construction business, I was working with someone just yesterday and we realized that there was a 9% that they needed to add in addition because of overtime pay, that just that alone. So I want you to not just look at it what the dollar per hour or the salary amount is, but the cost of the business because you have taxes and benefits and the time it takes in order to hire them and to monitor them and all those other pieces. Put that money aside in your profit first. That's what the beauty of profit first is, that you've got that set aside. You know that you can afford it. The other thing is, and this is a topic for another day, is that as far as when how to hire, I'm not getting into that today, but there's so much onto how to hire. But you also know that a lot of times it just doesn't work out. The person that you've brought on wasn't the fit that you were hoping for. And when you've got 3 months worth of that amount set aside, then you know that you're not in the hole, that you are giving yourself 3 months of a trial period in order, because the cash has already been set aside. And then you can make a change if that change needs to be made. All right. I don't see any questions coming in, but have a great week. And we look forward to seeing you next week. And reach out to us here at Sum of All Numbers for if you've got some real specific questions or would like some individualized help in implementing Profit First in your business.